Good morning. This is Bruce Fleet, President of Fleet Capital Management. It is Saturday, March 4th, 2017. Wishing all of you a very nice day. It's a beautiful day here in the Pacific Northwest. Kind of bluish skies, which is rare for us, but also snowing. It's a very pretty day outside. Today's video is going to be an overview, a very quick overview of the selection process. How do we go from cash in the account to a position in the account? And I'm going to focus on the RTA, the Risk Managed Trading Account today. Before we get started, I always need to say, it's a legal disclaimer that if you are not a client of Fleet Capital Management, please do not take any of the stocks that we discuss in today's presentation as a recommendation to buy or sell. I am going to focus on some stocks that I've recently purchased for the RTA account, but it's not a recommendation to buy. Those stocks may be above their buy price already. If you would like specific recommendations, if you'd like to talk to me, feel free to contact me. My email is brucefleet@gmail.com. With that said, let's get started. So how do we move from cash in the account to a stock as a selection in the account? And why is there usually some cash in the account? What causes that? What's the methodology? Well, the very first thing that we look at every single day is the market trend and the market trend health. It's critically important to have a trend in place, as I've mentioned to you many times over the years. And we did have a new trend begin just after the last presidential election in November. So December was the first full month of a new trend. So we look and see what are the technicals telling us about the trend and how healthy is that trend. If that trend is healthy, we continue to look for new securities, and then we make selections, as you'll see how we do it in this video. If the trend is what I call under pressure, we'll hold off for a little bit, adding new securities. And if the trend changes, obviously we'll get stopped out and we'll generate much more cash. But the first thing we do is look at the market trend. The second thing we do is we look at the allocation. Let me see if I can, bear with me one second here. So market allocation. Okay, this is the allocation that I've designed for the RTA, which is the Risk Managed Trading Account. And in this allocation, you'll see that I have sector ETFs, and a full allocation would be 6 positions at 5% each, is 30% of the portfolio. And as you can see right now, we have all 6 filled. This part of the allocation is generated by the sector rotation graph that I use and I've explained in the past. This is just blocking out a block saying don't go to 7 or you'll be over your allocation. So on Monday, and again, this is a different video, but on Monday I'll be looking at sector rotation. If I want to add something, I need to delete something. So I add the stronger, delete the weaker. What we're going to talk about today is primarily growth stocks, but I invest in both growth and value in the RTA system. Value stocks generally represent about 20% of the portfolio, and they are purchased in 5% allocations. Growth stocks, 49%, the vast majority of the portfolio, and I like to have 7. As of today, we have 6 stocks. So what this means is we have an opening for a growth stock and an opening for a value stock. So that's the allocation. The way a stock gets purchased, what I do is on Saturday, I always start my analysis by going over something called the Growth 250. And the Growth 250 has been designed by the portfolio managers over at Investors Business Daily. If you hear me say IBD, that's Investors Business Daily. And what their systems do is every Friday night, their systems run through every stock available in the country. There's about 8,000 or 9,000 stocks. And they come up with the 250 that display the strongest combination of both technical and fundamental analysis. Since this list comes out every Friday night, every Saturday, and I'm about to do this today, right after I finish this video, is I will go through this 250 stocks. Now, today there's 244 stocks, as you can see. This number does fluctuate a little bit. It's a dynamic number, but it's around 250. And what I'll do is I'll go through all 250 stocks one at a time, and the ones that are interesting to me based on a combination of fundamentals and technicals, I will flag. And you'll see why I flag these in a minute. These are the flags from last Saturday. When I go through this again, we'll be doing a new flag system, and we'll flag probably 50 of the 250 stocks. And once again, you'll see why we flag them in just a minute. It's for some of our other screens. So step one is the market trend. Step two is the growth 250, and then flagging them. Then once they're flagged, I have a number of screens that I use on a daily basis and an intraday basis. I hope you can see this. Let's see if I can drag this over here. There we go. So Near Pivot is a pattern recognition software that I use. If you see these little green lines around here, let me get an annotate. This is looking for patterns, and without spending too much time on patterns, patterns are bases. It's generally where a stock will consolidate. Like we had a very, very, very strong run up here. I'm not sure you'd want to buy in here because we're kind of near the top of the range. We wouldn't have known that if we bought here, but it is much safer to wait for a stock to create a new pattern. Here's a pattern where it drops down and it comes back, it builds a nice solid base, and then this would be called a pivot point, which is a safe place to purchase. So what this system does is all day long as the market is open, it is looking for these patterns, and just at this very moment, there are 4 of my flag stocks. Again, we're looking at a week ago, we're looking at last week, that are near their pivot price. So it just helps me keep drilling down from 8,000 stocks on this screen down to 4. And I'll go through these 4 and I'll take a look to see, am I comfortable with the pattern? How many patterns has it built? We really don't want to go over 3 because then a stock is starting to get a little long in the tooth. And when a stock continues to go up, we may be losing our spread of risk reward. So we're looking at weekly basis. So this is Near Pivot, and I may look at, let's just pull up a stock here, EFX. This is Equifax. I've been looking at this. When I look at a stock, this has a great looking chart. I didn't pull this up this is just accident that I pulled this up, but it's a great looking chart. It's going from lower left to upper right. Also, look how tight the movement is. Here's a wide bar, but most of it is very tight. That's something I look for. There's a new base being built. This is a consolidation. You've heard me use that word many, many times. The pivot price, if you can see on the screen, is $136.97. It's really the top, or 10 cents above that green line for pivot. So this particular stock has 3% to go until it hits its pivot. So this looks attractive. So what I would do then is I would go through all of the different metrics that I look at to see if this is a stock I want to buy. For instance, and let me turn on a drawing tool. This should all make sense soon. So let's see if this works. So the first thing I'm going to look at is the earnings per share. The earnings per share, I'd like to see 90 or above. This is a 95. I want to see the group relative strength. SMR is sales and margins. This is excellent. This is an A, so I know that their sales are strong. Their accumulation distribution, our institutions buying the stock, is strong. I'd like to see an A or a B. Their composite rating is strong. So as you can see, I'm looking at this stock real time right now with you, and I'm saying the timeliness is strong. The sponsorship rating, that's mutual funds that are buying the stock, is strong. So far, everything looks good. This is a stock we might buy. The earnings growth rate is a little bit weak. It's below 20. I like to see 20 as kind of a minimum, but this isn't too far from it. My earnings stability number, lower is better, and this is about as good as it's going to get. Return on equity, I want to see above 17% return on equity, 27%, outstanding. I want to see that the management owns some of the company. The management owns 2%. Mutual funds own 53%. I'm going to look at the up-down ratio. What that's looking at is the volume when the stock goes up versus the volume when the stock goes down. Anything above 1 is strong. 1.6 is very strong. So again, this came up on one of my screens, and now I'm just going through my technicals to say, is this a stock I want to buy? Let me go back to my mouse, and I also have what I've designed over here, which is an FCM checklist. These are things just to remind me of the things that are most important to me. Remember I mentioned earning stability? Well, here it passed because I want to see it between 1 and 25, generally speaking. So when I have a fail, and it's very, very rare to get something that's 100%, but this just points out that the relative strength is low. It's pretty weak. Okay, well, I had maybe forgotten to look at that. Let me go back to, so that's what these checklists do. They let me take a look. Bear with me here. They remind me to look at different things. I would like to see 85 or above. So this is going to give me a little bit of pause. I may want to wait until this relative strength goes back up. But again, it's very rare to get 100% of what you're looking for. On this particular stock, and I don't know if I'm going to purchase this stock or not, but on this particular stock, I'm getting a whole lot of stuff that looks really good. And, this may cause me to take a shot on the stock. So this is the near pivot screen. And again, I don't mean to be too redundant, but I'm looking at the market strength. I'm looking at the trend. I go through my growth 250, and then I flag stocks. This screen happens to be called near pivot. These are stocks that are near their pivot price. Near means within 5%. This is 3%. And then I start doing my work, and I start looking at all of my numbers. I'm going to look at any news that is available on the stock to see if there's anything positive or negative that may help with my decision. I'm going to look at the industry. The industry that the stock is in is ranked number 7 out of 197. That's really good. I always want to be in the top 50% industry rank. They say that the industry rank accounts for 1/3 of the stock performance. So that's very, very important. I also want to see within the group, meaning the group of stocks within that particular industry, how does it rank? You can see there's 41 companies in that sector, in that group. And the group happens to be financial services specialty. And, for the most part, they rank pretty high in their stock. So I'm going to look at that too. So there's a lot that goes into it, and then you just have to make a call, whether it's a go or no-go decision. And I'm not sure what I would do with this stock yet, but there's a whole lot of stuff that looks good. Another screen that I use, and I hope this makes sense, is what I call my FCM screen. This is a screen that I do, and when you can see only 3 names came up out of 8,000 in my FCM screen. And what I'll do is I'll go and look at those stocks. So let's just pull up one of these stocks and let's take a look at, is there anything in here that we want to buy? This is a stock that's been on a tear. It's gone up significantly. It is way above its 50-week moving average, way above its 50-week moving average. I'd have to do some math to calculate how far above it is. But that means, to me, it's overextended. So I'm not going to buy this stock. There's no question about it. Even though it's had a tremendous run, the risk reward is out of whack if you buy up here. Every stock will have a run up like this did. Look at this run up. This is a really strong run up, and then it will consolidate, and people will sell. People will take their profits. This is a perfect cup with a handle, it's called. And then the new pivot price would be right around there, which is where I would like to buy it. So this stock has had a tremendous run up, but I absolutely wouldn't buy it. I don't even have to go through everything else here, which looks pretty good. It's too far extended. The risk reward is out. So I'm going to wait, because this stock will come back. It will come back, and it will meet its 50-day moving average again. And then that's a much stronger place to buy. So this is the FCM screen. Let's go to another stock. Whoops. Let me go back to my mouse here. Clear. And let's take a look at the next stock on that list. Sinclair Broadcast. And let me try to clear drawings. There we go. So this is a stock. When I talk about a sideways consolidation, which I think many of you are getting tired of me talking about, this is a sideways. Now, each one of these bars is 1 week. So this is a very long time. This goes back to March of 2014. This is a stock that is consolidating, and that's okay. That's healthy after a strong run-up for some stocks. But then it started to build a new base. I can see the base building right in there, and the pivot point would be right about here. That's where I would want to buy it. Well, this is already 19% above its pivot point in 4 weeks. We didn't buy this. It didn't show up on my screen. We're not going to get all of them. But this is a stock that looks to me, again, to be too far above its pivot price, too far above its 50-day or 10-week, same thing, moving average. I'm just going to pass. I'm not even going to look at all the specifics. Another stock on here, let's see. Yeah, we had a beautiful pattern. This is called a cup with handle, a little breakout. But again, this is a little bit above where I want to buy it. I'm going to wait. There's no harm in waiting for a safer place to buy a stock. So we started with the trend. We went to the growth 250. I'm showing you there's a near pivot area. These are all screens. There was an FCM screen, which is a pure growth screen. Got another screen that I call Warren Buffett screen. Let's see what that brings up here. Let's try that again. So it's screening on completely different criteria. It brought up nothing. Nothing showed up in that particular screen because nothing met that criteria. I call it a Warren Buffett screen because that's a screen that I use for value stocks. So then I look for stocks that are in tight areas. Here's one. I don't know who this is. Mercury Systems. This little area right here is called a tight area. That's another potential buy point after a run up. So all of these different screens just give me ideas. And then I click through. Here's ANET. We've owned this stock before. So here's a question. Now you're a portfolio manager. This did come up on a tight area screen, but would you buy this? Well, they had an earnings announcement and the stock popped huge. Really big, strong pop. So you've got to make the decision. Are you going to buy this stock? Well, I don't think so. That was a pretty strong pop. It did, it's way above its pivot price, but you probably can't see, there's a little blue shade in here. It is a tight area for 3 weeks. Remember, each bar is a week. That is called a secondary buy point. So this is something I might look at. Not 100% sure, but it looks like it's run a little bit too far for me, but it's something I might look at. I hope you're getting the feel of, we start with a big universe and we just keep narrowing down. And then each of these screens that we look at narrow down even further. And then we take a look at each of these stocks to see if there's something there that we want to buy. And we do this all day long, every day that the market is open. Another source of ideas is Investors Business Daily. This is something I've been using since, I guess the late 1980s. But they have some stock lists, and a couple of the stock lists that I really like. One is called Sector Leaders, and this changes every day. This is a really strong screen that they do. What they're looking for is the number one stock in each sector that the sector is strong. Well, what you would notice is we own this stock, Western Alliance Bancorp. We own Broadcom. We own Essent. Okay, so we already own those three. This is a source of ideas I like. I don't own this company. So let's click on here, and that will put it over on my chart. So here's that stock, and let's take a look. Let's see if this is something that we want to buy. I like this. Each base, this is called base on base. There's a base that's higher, there's a base that's higher, there's a base that's higher. So each time it bases, the stock goes up. Okay, there's something I really like. And I haven't even started looking at all the fundamentals and technicals yet, but that's something I like. One thing that I don't like is, remember we were talking about tight areas? This is a tight area. Look how small those bars are from open to close. Meaning, now look here. Look how much wider these bars are. That's a lot of volatility. This is a lot of volatility. It's starting to tighten up again, okay? So I like this here. What I don't like about that much volatility is we're going to get stopped out. We're just going to get knocked out pretty quick. If a stock is that volatile, I'm just going to pass on it. I want to see a little tighter trading. This stock right this moment is just below, see that red line in there? Just below its 50-day or 10-week moving average. I love that. I love when it touches it and finds support. This has gone below it, which would cause me a little pause. It's also gone below it with higher than average volume. That just is a second thing that just gave me pause. Volume is the footprint of institutional investors. And on a down week, the institutions were selling. Does that mean they're starting to unload this stock? I don't know, but it starts to give me pause. Would I buy this stock? That scares me a little bit. I'm going to put it on my watch list, and I'll watch it for a couple days just to see if that passes and it starts back up or not. But I have a little pause right in there, so I think I'm going to pass on that stock. So what I was showing you was these ideas, and everything is ideas. This is a stock I've been watching for a long time, Mobileye. I like this stock a lot. But this is an idea from a sector leader stock list. There are a number of stock lists. Stock Spotlight is another list that they do over at IBD. You can see there's a lot more stocks on there. Let's see if there's anything we own on here. There's Paycom. We own that. We've owned Burlington before. We've owned a number of these. NetEase, we've owned that before. But so I'll take a look. Let's go to NetEase again. That was a great stock for us, and let's go put it on our chart. And let's see if it's something we want to buy. Let me open my drawing tool again. Looks good. I like that we're going from bottom left to top right. These are bases. This is the pattern recognition software. Here was a pattern, and then our pivot price would have been right there. We are 8% above pivot in 3 weeks, but it's starting to consolidate again. Remember, after a stock takes a jump, it's going to consolidate. So this might be something that we would look at, although it had a down week there. It's hard for you to see, but it had a down week, and volume was up a little bit above average. That gives me a little bit of pause. So the point is that there are 30 different things I look at on a stock. If all of those things were good that we just looked at, we're looking at the shape, we're looking at the tightness, we're looking at the base on base, we're looking at all of those things. If all that was good, then we would go back over to how's our earnings per share rating? Well, it's pretty good. How's our group? It's good. How's our sales and margins? Very good. Accumulation distribution? Very good. But we only go and look at these, earnings growth rate. Remember I said I want above 20. Excellent. That's really good. Return on equity, I want 17%. 38 is excellent. So after I look at the technicals, if it's something that I'm interested in, then I'll go back and look at all the fundamentals. I hope that makes some sense. So let's keep moving forward. We're not going to take too much time because I suspect this starts to get boring for you, but I just want you to understand that it's like a funnel. We start really big with the overall market. We just keep funneling down, looking for ideas. Then there are some screens that I use on Zacks, which is just a fundamental analysis company. I have a number of screens built in. And I use that for ideas. So, and then I use news. I read news all day long that comes from multiple sources, and I may see a stock that was mentioned in the news. For instance, one of the stocks that we just bought was a news stock. Let me go back to here's my current holdings. We just bought, let's see, which stock was that? Bear with me 1 second. We just bought a stock the other day. I may not even have it on here yet. Let's see. Nope, that's not it. So we just bought a stock on Friday that I haven't updated on here yet. I usually do that on Saturdays. And that was a stock that just came through the news, that everything after I examined it looked good, and we thought we would take a shot on it. So with that said, that's how we get ideas. Now, let's say, and what you can see is we start with 250 and then I add all of these other stock lists. Let's say we go through 300 to 325 stocks a day. And let's just say after I go through all of those things, there is just nothing that meets all of my criteria. There is nothing that I want to buy for your portfolio. Well, then you still have cash in your portfolio. So I won't just buy a stock to fill up the RTA portfolio. It's got to have a reason. And right now, like I had shown you before, we have a spot for a value stock and we have a spot for a growth stock. But if after going through 300 stocks in a day, I just don't see anything that I feel risk reward, we're always looking at risk reward that I want to buy for you, I'll wait. There's nothing wrong with waiting. There has to be a solid reason to add a stock. We're almost full in our portfolio, but we have just a little bit further to go, about 17% more to go, or 12% actually more to go. I hope that makes sense. Now, once we have our stocks purchased for the day, we go to holdings. And I look at probably 5 times throughout the day, probably once an hour, hour and 20 minutes. I go through every stock that we currently own. And here's Broadcom. And what I'm looking for is we already own it. So I don't have to go through fundamentals. I don't have to go through any of that. What I'm looking for is how is the stock performing, especially relative to its 10-week or 50-day moving line. That's the red line. This is a 200 down here. And how's the volume? So in this last week that just ended yesterday, Broadcom was up. You can see, I'll get my little pencil drawing thing here. For last week, Broadcom was up. There it is. It's blue, and it was up. And volume was above average. Remember, volume is a footprint of institutional buying or selling. This is good. This is what I want to see. Individual buying or selling does not affect volume. Individuals don't affect it. Institutions affect volume. And this is a very good sign. So it's one of our holdings. It looks really good. We're going to continue to hold it. Let's take a look at a couple others. Let's see how Paycom. Paycom, again, doing nice. This is called 3 soldiers. It's just a technical term. It's actually 4 here, but we had an earnings pop, and then we had 3 weeks where it consistently went up. That's a very, very strong sign for a company. So I'm looking at, I have no worries about this. I'm going to continue to hold it. Let's look at Alaska Airlines, because that's kind of bobbed around a little bit. We bought that about a few days ago. If a stock is down, I want to see if it's finding support on its 50-day moving average. Does that make sense? Let's see if there's a better, there we go. Let's take a look at this. This is Thor. We've owned this stock 2 or 3 times. And Thor started to come down. This week was down. This week here was down. But look what happened. It found support on its 50-day moving average. And actually, that's where we bought it. It had jumped up. It came back down. It got some sellers out. But it stopped at its 50-day moving average. Stocks that have really good institutional support, which this does, tend to find support at their 50-day moving average, because those mutual funds or insurance companies or institutions, they'll start to buy shares every time it hits its 50-day or 10-week moving average, and that creates support. I made a decision to buy it for you right when it hit that 50-day moving average. So that's another buy area, and that was a support that I saw that I found very interesting. So I'm looking at these, and I'm looking at every stock that we own multiple times during the day. Let's go to Lear Corp. Again, it's not been performing real great, but it looks like it's finding support on its 50-day moving average. So I'm going to wait. I'm going to give that a little bit more breathing room, if you will. So again, to recap, we're almost at 30 minutes, and I try to keep it around 30 minutes. But we start with the big picture. We start with the trend. We move into the Growth 250. I do my flags on the Growth 250 every Saturday. I have all of these different screens that help me identify potential ideas. The Warren Buffett screen for value, the FCM Growth screen for growth. We look at news, we look at IBD stock lists. I mean, there's a lot of places, and then we go over our holdings every day. So that's how it happens. Certain stocks will then get stopped out. Let me show you that screen. So here is, I do this off of Yahoo. This is the RTA account, except for this bottom stock. Just ignore that. But this is the current RTA account. You can see on Friday, pretty much every single thing that we owned went up. Utilities went down a smidge, but everything else was up on Friday. We had a really good day on Friday. This is our gain or loss since the date we bought it. I've got dates over here. So this is live during the day, so it's constantly changing and flashing. So once stocks are in the portfolio, we're monitoring them really minute by minute. I have my stop prices here so I can see how close we are to a stop, but this is once we own something. If we were fully invested and something gets stopped out, well, we've got more cash in our account. That always changes. Another thing I do is I look at the attribution. So this up here is just, and let me get a writing tool for a second here. Here, I'm just looking at our growth stocks, okay? I break it out into different sections of the portfolio. And you can see that in our growth stocks, we're about 2-to-1 winners to losers. That's about as good as you're ever going to get. You're never going to hit 100%, but 2-to-1 or around 7 is just absolutely fantastic. So this is the strongest segment of our three systems. And you can also see that when we have a winner, we average 7.1% on the upside. If we have a loser, we've been averaging 4.1 on the down. So even though we have more wins than losses, our wins are bigger than our losses. Here's our average number of days that we hold a stock, and here's our system quality. This is updated every single time we sell a stock, not when we purchase it, because we don't know if it's going to be a win or a loss, but every time we sell a stock, we update these attribution analysis boxes. Underneath those boxes, I look for what was the source of the stock and how's that doing. Remember we talked about near pivot? And I just started doing this particular attribution. So I've only purchased one stock, that ESNT, and we were 1-for-1. We had a win. Alibaba has not sold yet, so it doesn't have a plus or a minus yet. So what I'm doing here is I just want to see where these stocks come from, and does that have any effect? Because if most of my winners are coming from the pivot, I'm going to focus a lot more on that screen. If most of my winners are coming from my FCM growth screen, I'll focus on that. So this is really just more for me to understand where things are coming from. This is my new WB screen. This is something that I just created for value. Our value stocks are doing well, and Thor and Alaska both came up through there. And this is our ETS. So even after we purchase stocks, I'm always looking at how are our holdings doing and where are the gains really coming from, or where are the losses coming from, so I can start to get rid of that part of the stream. Finally, just so you know, this is called the JBL Growth Manager, and what we're looking at here is just my growth stocks. I just took a picture of this from another computer in my office, but so what this is doing is these stocks here are open. You'll recognize these symbols. We own them right now. We just bought Logitech on Friday. Down here are our closed trades, and this is where I score my systems. You can see on closed trades on growth, there it is right there. 67% were winners, 33% were losers. It's looking at my rates of return. You saw this on the other page. It's looking at days held. This is where I get that information, and then it's looking at system quality. Now, system quality is something that would take a long time to explain, but I'll just tell you that above 1.5 is really fantastic. Above 2 is sensational. That's why, and this is 2.2. So it would take me a little while to explain to you how the system creates this scoring, but this was done by a PhD from MIT, and this is a very accurate way to score. That way, I can look at all my systems and I can score them and know how we're doing. We were doing earnings trades, but the score kept falling. So I stopped doing earnings trades, and that's where our losses came from in February. That system now goes back to paper trading. I'm trading it, but not with real money, trying to figure out where was the weakness. Can I find the strength again and put it back into the system? As of right now, the answer is no. It's not coming back into the system right now. Doesn't mean it won't in a couple of months. So I know this was quick, but this is how I go through. This is what I do every single day. And again, just as a recap to finish, we start with the overall market, which is the most important thing. We go into the Growth 250 to flag certain securities. We go in through all the different screens that I use that are all different reasons that I might want to buy a stock. If I identify something that looks interesting, then I go through all of the technicals. I go through all of the fundamentals and the news and everything else I had shown you. If it passes all of that, I make the purchase for you. If it doesn't, I move on. There's no harm in moving on. And then once the stocks are in the portfolio, I monitor them on a daily basis, hour by hour. Again, these are our current holdings. And then I start over again. And so now you know what I do all day long is I'm always looking for candidates, but I won't just buy a candidate. I do get phone calls that say, hey, Bruce, the market's going up. Why aren't we fully invested? Because I haven't found anything that I feel is appropriate to buy for you is the answer. I would love to be fully invested. We're really close right now. What normally happens is I'll buy you a growth stock and then another stock will fall off because it's just not performing. Well, now we have a blank box again. It's probably going to be rare that we're 100%, but we're so close. So we only have one value stock and one growth stock. And then going back to the sector rotation, this is only done once a week. This is done on Mondays. So, day after tomorrow, I'll go and I'll reevaluate these. So that's the point. I hope that answers a couple of questions. I know I ran through that very quickly. If this is interesting to you and you would like to dig into this further because you have more questions about the logic behind purchases or sales, shoot me an email. We'll do a one-on-one. You know that I'm always available and always happy to do that. But this is what we do. I hope it made sense. I hope it was worth your time. And thanks. Have a great weekend, and I'll talk to you soon. Bye-bye.